The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host here at TFNN. And of course, we got a market that's off 25 points on the S&P cash. Just 2.15 billion shares as we start the show. So is volume up a little? Yes, but not up a lot. And we pretty much opened what I thought would be at support somewhere around 2060. Volume is fairly light today. We also have the option market makers going delta neutral tomorrow. So I'm going to get a much better read on what we're going to do for the next week and a half. But kind of standing back here, not really got a good idea, but I've got some clues about what's happening in the market. I think those clues will be confirmed tomorrow. But starting to see action, of course, in the bond market. We've seen Bill Gross's fund, both his new and his old fund, really start to see fund outflows. So bonds look like cash is coming out of them. Now, the question is, from now on, what happens to that money coming out of the bonds? Does it go over to Europe? Does it go into the equity market? And right now, I think there's a good chance that we see a bubble developed in a great deal of many stocks. And we've got a lot of charts to look at, but probably the most interesting thing to me was how many energy stocks were down to previous lows on lighter volume yesterday. And anything from XOM, which is down a little bit more today, but we'll have to check in on the volume before the end of the day. But not seeing a lot of volume. I could still see people coming out of bonds, going into equities, chasing returns back up at these highs and maybe driving us back up there one more time before everything rolls out on them. But I do digress. So we'll talk about that a little bit more. And, of course, everything is awesome. And we'll start off with a little history.
That it's all just a little bit of history repeating.
And on this day in 2000, James J. Cramer, who's got his 10-year anniversary of Insane Money, Insane Investors on Insane Money, his program at 6 Eastern, where he talks about being insane and insane trading. Or is it just mad? I think we're all mad. Anyway, James Cramer, author of the column Wrong for TheStreet.com, writes that a revival of stock values will only happen when brocades and Broadcoms blow up, and I don't see that happening anytime soon. Of course, this is today in 2000. In fact, Cramer says he's tempted to short sell Warren Buffett's Berkshire Hathaway. And, of course, this is the guy that's been on CNBC for 10 years. Today is the absolute peak of the market bubble. In one of the worst crashes in history, the NASDAQ plunges 60% over the next 12 months. And Cramer's red, white, hot brocade is down 67%. Broadcom is down 84%. And meanwhile, the fund he wanted to short, Berkshire Hathaway, gains 72% over the year to come as people run to stocks that aren't complete frauds. But of course, this is the guy that they hold up as the example of people on CNBC. And hey, put your quarter in, watch the dancing bear or bull plop around the stage. But if you read his own books, by his own admission, he basically drove his fund bankrupt almost twice. And only when he left did it start doing better. But he pretty much left for one reason, and that is that they changed the rules and regulations. That is, if you gave any inside information to anybody else, then you could be thrown in jail. and I think that came in 2003. He was the consummate inside man, always trading on inside information. Not much in either technical and fundamental analysis, only in trading that inside information, both politically. If you've ever heard of the governor of New York, he was the gentleman that basically did a grab bag to make sure that that guy had all the cash he needed to go for a New York governor run. And of course, he was later disgraced as client number 9, if I remember right. But I don't have any love for the guy. I don't hate him. I just find it kind of insane that they have one of the guy that has kind of a pretty horrible record as the main guy, as the main investor for CNBC. And of course, today is his 10th year anniversary on CNBC for Insane Money. Or is it just plain mad? This program, which claims no level of mental instability, has continued for 4 years now. But I don't get a big party. But I'll go grumble elsewhere. Yes, his wife came in and saved his bacon twice. Somebody, but you can read his books. He basically said he's a horrible trader. But I do digress. But probably more interesting to me is that this day in 2000 was the height of the bubble after, of course, a big crack right after the first of the year. And that was the warning. Today was the peak to short. And I don't know. Are we close to that? I don't think so. We'll go into some more charts today. But to me, I think we've got just a little bit more to go, and I'll know more tomorrow. But I think there's a good opportunity. They hold this market back up until options expiration. But again, I'm waiting for some more evidence to take a look at that. And of course, would have liked to seen a lot of volume come in, more energy to the downside. Could we have a low volume retracement even further? I think the answer is yes. Will it last a little longer? Yeah, I think it probably lasts till tomorrow afternoon. If they're basically getting everybody pessimistic about the market, I think that there's a good chance that they could run this market up slowly and quietly and run a lot of shorts out of the market before this thing cracks. And that may be after a week from Friday with monthly expirations. There's an old saying in the market, and that is when severe pessimism develops, probably time to actually cover your shorts. And there may be something to that right now. Severe pessimism and no volume, 2.2 billion shares, which is okay, but it's not the kind of severe kind of volume that you'd think after 50 points, 60 points off the top in the S&P cash. Of interesting note, Apple, of course, came out with their iWatch yesterday. I had been warning about a problem with people not knowing why they needed to buy the thing other than they were cult members. And as cult members, you have to buy the talisman of the Apple cult. And a few more people now starting to talk about what the use case is for this. And it's fairly cloudy. And I can tell you that if you can't explain on the day you launch your product in one sentence why someone wants to buy it, you're in trouble. And could they figure out a reason why in the future? I think the answer is yes. And I think I said it over 9 months or a year ago in the Tech Insider. Basically, Apple has decided that the only way that they can keep sales up and maybe grow them is become the not Hoover, what's the other vacuum, door-to-door vacuum clean? The guy that was throwing, I want to say, my mind has wandered out here. Anyway, we were talking about Apple yesterday, and they really don't have the use case. They can't put it in one sentence. My boss would always say, hey, you need a rifle shot. And a rifle shot you can describe instantly. in one sentence. If you have to take a paragraph or two or three before anybody even has an idea of what you're trying to sell, you're probably screwed already. And I think that's kind of the problem with Apple right now. Well, does it tell time? Yes. Well, I've got that. What else do you use it for? Notifications. Well, my phone kind of buzzes now already. Well, yeah, but you can do all these things on it. Yeah. And there just hasn't been the compelling case out there. And we talked yesterday about the compelling killer app and how Macintosh had no killer app until desktop publishing came along a few years after it had been in business. And at the point where if it hadn't come along, Apple would have been a footnote to everybody and just part of the tech wreckage of the 1980s and never have made it. And what else can you say on it? Now, of course, last night and today, we're finding out a lot more about how the NSA was actually hacking Apple's iPhone a year before it came out. And I think a lot of people are a little bit misguided about the way that this all works. They think that there's going to be at least help at the top. And a lot of times, CIA or NSA will have to go to extreme conditions to get into either an individual's or a company's data. But more than likely or not, they will find somebody that gets arrested, or their brother gets arrested, or they've got some dirt, or cheating on their wife or something, and they'll use what are known as honey traps and other things like that to find a vulnerable individual and slowly turn him over to being a spy inside the company. This is why the people at the highest parts of the company have plausible deniability, and they get the exact same results, and no one's the wiser for the most part. There's a lot of very smart people at the NSA, and they'll figure out ways to do it and cover it up. And if anybody does find out, then they get a letter from the government saying, if you say anything, we're going to throw you in jail. And most of the time, people just not looking that hard. But from putting vulnerabilities in the chips that they get from other suppliers to make it easy to hack things, it doesn't matter. Anyway, the news was twofold. One, that NSA was at a big retreat, and a lot of these guys were blowing their mouth off about how they could hack a thing called Xcode, which was a development tool to gain access. But we now know from Snowden that they had people inside Apple a year before it even came out, hacking and figuring out ways to get into the iPhone. So there's nothing new down here under the sun. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're off 30 points on the S&P cash, so got a little downside out here today. But there's some interesting things going on in this market, so I'll keep a close eye on them. And there's people talking in the den about potential double tops and failures. And I think we probably are, but this is probably just a little early. I think I'm thinking that we look into next week to find the short where you want to probably set the hook for a lot of shorts. Maybe again next Friday or a couple of days after that. But maybe we get volume before the end of the day. But right now, I'm just seeing too many of these stocks with very light volume. There's some fairly decent signals out here. The downside is that we didn't have congruent action. And if anybody's listened to my show for a while, I talk about congruency, i.e., that I want to see not only the highs tested with lighter volume, I want to see the energy in stocks go back up to these highs with lighter energy. And my power law vector indicator is one of those tools for looking at the actual energy between swing highs and swing lows. On Amazon, one of the things I dislike about shorting it is the March 13th high of 2014 down to the May 9th low compared to the January 16th low of this year to the February 26 high out here. We actually had more energy up than we've had down. That got back up to these highs and the volume kind of fell out. But that doesn't tell me that we've got a horrible downside risk in the stock yet. Most of the time when you get light volume tests at the top, but the energy is fairly good, you have a good chance of getting back up there and even finding lighter volume than we've had to this previous top at 389.37. And do we have to get it? The answer is no, but I know my odds are 10 times better if the energy on this last leg up wasn't very strong. And that's one of the problems with shorting some of these stocks, and one of the reasons why I think that there is an opportunity to look at some of these. Now, some of the more interesting stocks that I've been looking at have been out here testing lows on lighter volume. In case of Archer Daniels Midland Supermarket to the world, if you look at the February 4th low, you had 9.2 million shares back there at $45.87. We're going through that today with 1.5 million shares. So maybe some of the commodities are looking a little bit better out here. But the ones that I felt more interesting or more interested in are these light volume breaks of previous lows in the energy sector out here. And, you know, basically it was looking at yesterday's low and diamond offshore drilling, and the December 1st low, 29 bucks with 4.5 million shares. Yesterday we kind of tapped that and broke it with 2 million shares. So half the volume today, 1.4 million shares. I'm thinking we're getting awful close to some kind of meaningful bounce in crude out here when you look at enough of these charts. And even the big consolidated ones like ExxonMobil, just not having a lot of huge volume down at these previous lows where we saw significant volume in the previous lows. The December 16th low in ExxonMobil, $86.19, 26 million shares. And we kind of got into it and pierced that on January 29th with 22 million shares. So a little lighter, bounced again, and now we're back into it. And of course, we're keying off that December 16th low was 26 million shares. In the last 3 days, 16 million, 14 million. Today, 9.6 million shares. And it just kind of looks to me like we're kind of running out of steam. We may need to bounce to gain enough energy next time to come down and break those lows if you think you're bearish. But for me, it's awful problematic to see very light volume as we break previous lows out here in things like ExxonMobil. So it's continually problematic. And I don't know if we have enough time. Some of the other stocks out here that look like maybe they're finally trying to make some kind of bottom. Yandex, the Russian stock YNDX. You've gone from the December 16th low at 15 bucks with 12 million shares. It pierced it with half that volume and bounced on February 2nd. We are back down there now with 3 million shares. So I don't know. It's getting awful tough to start saying that there's pressure on the bottom in all stocks. There is some in some of these equities, but continues to be light. Anyway, we will be we'll be looking at a lot more of these stocks out here that may be either bucking the trend or telling us where the new trend is coming from. We'll be back in a minute. Give me a call.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, we are back. I was trying to catch up on the news during the breakout here. Seems like Hillary's decided to be rude and interrupt the power trading hour by talking during my show. I guess she just doesn't know. Doesn't know the power of the power trading hour. Anyway, very interesting. Anyway, we were talking about Yandex when we left, and just not a lot of volume in these Russian stocks. I'm wondering if that means that we've got, maybe some kind of solution is really starting to take shape in the Ukraine border. But what else can you say? This thing's way off, of course. And, am I going to be buying it? The answer is no. But maybe there's a temporary low in some of these stocks out here. But again, there are a handful of these things that are starting to make some kind of lows. Warren Resources, one of these stocks that's way off, was $7 just a couple of months ago. Actually, August 26, 2014, this thing was $7. It's now down to $1. A lot of these resource stocks on the downside. Now, one of the things that someone brought up, and I think it was in Tom O'Brien's show yesterday, a gentleman called in about MCP, Molycorp. And one of the things you need to know, especially when you look at these stocks, is it a 3 or a 4-letter stock? If it's a 3-letter stock and it's on the NYSE, they don't allow stocks under $1. And one of the things you should look at instantly is whether it's on the New York Consolidated tape or if it's on the NASDAQ tape. NASDAQ doesn't really care as long as you've got cash and you're going concern. The NYSE doesn't want stocks on it less than $1 in value. And you'll get a letter like MCP did that said, hey, we're kicking you off the exchange if you don't get your stock price in the next 3 months for 30 days in a row above $1. And that's always one of the problems on this one, NASDAQ stock, so not as big a deal. But you want to keep an eye on that. What can you say? Warren Resources, not a bad looking, some of these stocks out here, not really bad looking if you're looking to go long. Now, question is whether the market will help you out in a nice bounce over the next few days, but the risk reward probably fairly decent as this stock, everything pretty much under these lows back on December 12th are basically false breakouts. And, not a bad looking chart out here. It did go back above that big low of December 12th last year. And but now it's back down to the $1 level, which is the January 30th low that had 1.7 million shares. And of course, all we got today is 844,000. So could this be a low volume pullback and continue farther lower? I think the answer is yes. I would have liked to seen some other stocks, though, really break today. And of course, if we want to go to the canary in the coal mine, it certainly is the Biotech Index Fund. They're back buying this thing again today, and it is not broken its trend line down. I suspect that this and a couple other sectors are going to be the very last ones to throw in the towel. But again, the energy was not all this bad coming up from these last two lows. So I'm suspecting that you get a pullback and then maybe a run back up to this high on March 5th with much lighter volume and very vapor volume, maybe even break it and then come back into the trading range. And maybe that's the sign, and maybe that'll take us another 7 or 10 days to go. But I think there's going to be a nice little relief rally, and I'm not exactly sure what it is. Like I said at the beginning of the show, it could be as much as people leaving bonds and throwing more money into equities, only to see this market rally one more time and let us almost like T-ball. They're just going to set the ball up there and we have to hit it. No fastball to hit. Right now, I know a lot of people could see this market moving lower, and I could too. It's just I don't see the volume in either the broad market and or a lot of individual equities. There's some that really stink to high heaven, and of course that's a problem. But we're under 2.4 billion shares, and we're off 30 points on the S&P cash. To me, that's problematic. Also, going into options expiration, we could see a nice little pop as we have gone down to these lows on lighter volume. 80% of expirations are bullish, and maybe we get lucky here and get some nice option plays off before the end of next week. Anyway, IBB, other stocks of interest out here. WP Glimature, is that how we say it? Another one that's been bouncing along these lows. I don't know if its low is as good as you would like. What I think is this thing came down on monster volume September 18th last year, and it's been trying to break through these lows several times, but there's just not a lot of volume. In fact, the volume continues to shrink. It was very low December 16th, kind of rallied back up. We're back into that low one more time. It needs to get to 1588 with less than 1.9 million shares, 1.2 million shares yesterday, 500,000 today. I mean, you're in that candle. And again, basically, if you close back above 1655, this thing should have a lot of juice back to it. This thing has been consolidating back in those lows for a while. Terraform Power, which is a very interesting stock when we're talking about double tops out here. Again, I like to scan for stocks that have half the volume at the highs and then start looking at them. And again, energy was kind of good on the way back up on this one, or I'd be short it. November 18th hit $34.74, 2.8 million shares, and then we get the March 5th high out here, which goes 70 cents above it. We're closed back into that trading range now. But again, I would love for this thing to pull back, get back up to those highs, and have the last leg energy fall out also, not just this. Now, some other stocks, like I said, more energy stocks out here had some high volume lows, are now kind of coming back through it. If we go back to the January 14th low on Southwestern Energy, SWN, this thing kind of had a little reversal gap up. It's gone through that in the last couple of days, but basically had 48 million shares on the 14th of January. Yesterday, as we went back through it, 11.8 million shares. Today, 5.5 million shares. You would think breaking these lows, we'd start really seeing volume ramp up, and I am not in these energy stocks. So maybe there's something else going on I'm not familiar with. Of stocks making highs on lighter volume, ResMed, RMD. This thing had a 5.3 million share high on January 23rd, $67.50. We've gotten into that with 850,000 shares yesterday. So 1/5, less than 1/5 the volume yesterday. It's back into the trading range, but yeah, not a lot of movement in that one either. Normally you see stocks like this in a market that is ready to crack. They just crack instantly. Pernix Therapeutic Holdings, PTX, is, ResMed, CPAP machines, sleep apnea. Pernix, anyway, another one up here. The volume is not as light as I'd like. It's a little bit more, but just kind of thought this was kind of interesting as a test of the top. November 12th, $11.68, 1.1 million shares. You got 760,000 shares, so it was a little light out here. But what can you say? PLL Corporation, this thing's banging around at what has been fairly significant support in the past. The August 6th low of last year, $31.79, 8.2 million shares. Tried to get into it with 6.1 million shares in October 16th. Now, we went through down with volume yesterday of 7 million shares, so we're still a little lighter than that. And now a couple of dojis out here to the side. So this one's probably more of a coin flip, but interesting nonetheless. Now, in the memory business and semiconductors, probably nothing more important right now than Micron, as it is down into its previous lows where it blew out and blew down on October 10th of last year with 85.7 million shares. Got back into it on February 2nd with 34 million shares. Now we're breaking back down to test that absolute low of 26.32 from October 15th. What do we got? $1.20, $1.10, $1.15 to go on this thing, and this is what I'm thinking we test tomorrow and what's going to be so important. But basically, you're going through these lows of about 50 million shares today with 22 million shares, and that's going to be the tough part of it. Okay, what else do we have going here? LLY. Eli Lilly and Company. Now, this is another one that I wanted to keep a close eye on, thinking that if we were really going to break down now and not rally up and then start seeing these lows broken down, we'd probably start seeing some of these bigger companies be sold. The January 7th low at 68.45 had 9 million shares. Had a kind of a big candle just a couple of days ago on the 6th, but only got 5.8 million shares to 5.9 million shares. And of course, about 5.8, a little bit up yesterday, and today 2 million shares. So yeah, we are back at these lows, but it's not like a lot of volumes coming back in. That's why I suspect that maybe we have one more round of money coming out of bonds and maybe into equities, and that actually sets the high in the markets, and maybe that's another week or two or few down the road. Endeavor Silver Corporation, EXK, had its last major low December 17th, $1.83, 2.3 million shares. Yesterday, we came into that with 1.4 million shares. Today, 1.1 million shares so far. Again, a lot of these things the volume kind of drying up down here at the bottom, which is exactly what you want if you want to go long. Encana Corporation, ECA. And let me get the profile on this dude. Again, you can call me at 877-927-6648, or you can email me at path@tfnn.com. And I was thinking of what Apple wanted to be. I was thinking of Electrolux. And thanks, Sandy, for sending me Electrolux, the door-to-door vacuum cleaner salesman that sold all the attachments. Anyway, Encana, out of Calgary, Canada, engages the development, exploration, production, and marketing of natural gas, oil, and natural gas liquids is another one. Oh, Kirby, too. Yeah, I forgot about Kirby and Electrolux, both of them. Encana in this business. This is why I'm thinking that we've got enough of these energy stocks out here that if this thing does not crack at the moment, I don't know, Royal, they didn't have them in my area. December 16th out here, $11.44, 14 million shares. Tried to get back into it on January 30 with 10 million shares. Last 3 days on this one have been 10 million shares, 8.6 million shares today, 5.4 million shares. And again, kind of seeing these false breakouts. If the market doesn't fall apart, it's going to be very interesting to see how some of these down at the lows come out. Another petrol company, EC, coming to its previous high volume low of December 16th that had 2.2 million shares, $14.17. Yesterday, this thing had 1 million shares. Today, 588,000 shares. So a lot of these stocks where the volume is just drying up in these energy production stocks, and I think we need to keep an eye on them. Other stocks of interest, CenterPoint Energy. Again, a lot of these energy stocks had these high volume lows, and we are breaking through them on lighter volume. The October 15th spike low on this one was 3.7 million shares, October 15th, $21.07. So just under 10 million shares. The big heavy day down that we had was on the 26th of February in this, but just 6.7 million shares. Been kind of going sideways, had a little pop-up with a little doji out here, and right back to going sideways. 1, 2, 3 days of going sideways. But today, 3.3 million shares. So we're at about 30% of that huge spike down from October 15th. So you want to keep an eye on that. Other stocks that are interesting are Orico Gold. Now, this one's breaking its November 5th low at $2.92, 4.1 million shares. And yesterday, as we went through that low, we had 3 million shares, so still 25% light. Today, 2.6 million shares so far. So do we get 3 million shares? It could be, but it's not like everybody's throwing the baby out with the bath water out here. And did we talk about, I think we already talked about Acadia. So when we come back, we'll talk about a few other stocks in play out here to wrap up the show. But you can always give me a call at 877-927-6648. Email me at path@tfnn.com or post a message in the den.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we get back from the break, we're going to look at a few of the stocks that are kind of moving out here. Interestingly enough, upgrade on Credit Suisse, CS out here. And of course, their CEO is, or they're getting a new CEO, and I guess they like him. Anyway, back up to the previous February 25th high out here with 1.3 million shares, with 3.1 million shares already. Strangely enough, it's not above that, kind of right up to that gap that it had, and has stopped, which is most interesting. NVIDIA, of course, up a little bit. It was upgraded. Come on, NVDA, right? NVDA. Come on. Now, this is kind of almost breaking out. My guess is that a lot of people think that NVIDIA is a takeover target for Apple or some other company. It's hard for me to see that Apple buys them, maybe some other company, maybe Qualcomm wants to get rid of them. Maybe Qualcomm would like to add them to the stable. There's a few people out there that are rumored to have taken them. Of course, this is just an upgrade, but my guess is that upgrade is based on probably inside knowledge that they're shopping this thing around a little bit. But, of course, this thing came out with earnings the 12th of February. Nice gap up. It hadn't come back and filled that gap. Now they're pushing the rumors around on it that may or may not be true. Let's see. Needham is yelling, "Sell, Mortimer, sell," on Electronic Arts. And, of course, on a down day, not all that much energy, but is coming off a little bit. Not a lot of stocks moving significantly today compared to the rest of the market. But Electronic Arts is down. And you'd kind of like to see this thing back to about 50 to buy it. That would be kind of sweet if you could get back in that. It took off with a sign of strength on 16.2 million shares back on the 28th of January. And of course, 3 million shares today as we're actually getting into that candle. But we'd like it to come back and fill a lot of that gap on light volume and have the opportunity maybe to buy it. Urban Outfitters, BN, one of these stocks that's just massively short and had a huge gap up on the fact that they're not going out of business tomorrow. And a lot of people, that's basically all it takes is, 30% short interest and something that says that they're not going bankrupt tomorrow to go wash out a lot of shorts. And, of course, on a day like this, they're probably screaming and gnashing and wailing of teeth because they can't. It certainly looks like it's up against the May 20th, 2013 high at $44.96. But you've got a sign of strength out here. It's gapping up over these high volume gap down, and that happened back September 10th of 2013. This thing gapped down with 14 million shares. So you wanted to see how this thing came up. 9 million shares today, not all that bad. And actually 44.15 is your August 20th, 2013 high, and 44.96 your May 20th high. I could see this thing maybe run another buck up to those highs. Pretty interesting, but this has got now two very nice, huge gap ups, and maybe we're going to get one more out of this thing before the music starts to play. We're out of time. Anyway, hang on for Tom O'Brien over most of TFNN the next 2 hours, then Andy Heck after that, and of course, what else? Sell when you can, not when you have to. See you tomorrow. Same bat channel, same bat time.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.